Hello, wealthy, successful, money-making traders. This is your trader's friend. Thank you for joining me for another video. Guys, I'm so glad you're here. I'm making this video because so many people are struggling in the market right now and it breaks my heart. So I want to throw out some reminders. First of all, trade what you see, not what's in your head. Trade what you see only and forget about everything else. Trading what's in your head can get you killed in this market. Follow your price. There are times that your price will trick you and deceive you. However, price is still your number one indicator. It will tell you more truths in the market than anything else. Trade with the stop. Always use a stop. A stop is like an extended warranty on your laptop or your new car. It's just extra protection. And a stop loss is exactly what it says it is. It is the stop of the loss of your money. See it as like an insurance policy. If your trade goes dead, your stop is there to protect your money and your way of life. So always use a stop. I know we've all heard those stories about the stop hunters, but let me tell you, it's much better to be stopped out at 20 pips than to wake up or to open your screen and find out that you have a trade that's gone 200 pips against you. Now you're having to pray, beg, scrape, stress, and all of this stuff, hoping and wishing that this trade will come back. Guys, if the market stops you out, the only thing to do is to wait for an opportunity for another trade. It's the held losses that linger. The stop losses, pretty much you forget about and you move on to the next trade and the next opportunity for profit. So cut bad trades. Use stop losses. Never let them trap you. Never let them trap you. This is the ultimate trapping game. Don't let them trap you. Know the times of day that your pairs are the most liquid. That's the time for you to make the most money in the market. Now, when I enter a market, I am looking for a trend bias. Why? Because the trades in harmony with that overall trend yields the most money. And the truth is, that's what we're all here for. We're all here to make the money and enjoy a better lifestyle. Let's kind of follow this trade out. And this is my 10 SMA, by the way. Let's shrink this a little bit. Now, what you'll note is that the trades in harmony with this bullish trend yield more money. Oh, I can't go past this. This is classic. Guys, this is exactly the trade setup that I look for. That strong break and close of that 10 SMA. Of course, this is my 10 and this is my 200 SMA on the 5-minute time frame. But if you are counter trend trading and you see that the market is going against you, go ahead and cut that, because your counter trend trade is like a date. You go out, you have dinner, at the end of the night you drop that person off and you go home. But your trend is like a long-term marriage. It is that sweet, comforting relationship that supports you and nurtures you with the dependability and stability that you are looking for. And you'll see this is that classic trick, trap, and kill. And I'm sorry, I just hit the microphone, by the way. But as you shrink your chart, what you will note is that price never came back there, ever. And we are way down here, and you can see that price never came back there. So what you'll note is your counter trend trade, and every trade is a counter trend trade. The trade that is countering the overall trend, you can see that they're just short term arrangement. This is not something that's long term by any means. But you can see that the people who got trapped in these little relationships, now the market has moved against them sharply. And let me say this about a bullish market. In a bullish market, most of the times your correction and retracements are buyable with bullish confirmation. In other words, as long as price is above your trend line, most of the times your pullbacks and retracements with proper bullish confirmations are buys. They are buy opportunities. They are buy opportunities. And for me, it is the strong break and close of the 10 SMA. And I will tell you, the strong break and close of that 10 SMA in harmony with that trend most of the time is going to yield a lucrative, profitable, money making trade for you. Now, with this Euro USD, and let me say, in between times you get these kind of choppy kind of trick areas. That's why it's so important to trade at the time that your market is most liquid, simply because, and sorry about that, that's my phone, but simply because, okay, sorry guys, I was saying something about going in harmony with the trend, but I had an alarm set and wanted to turn it off. Sorry about that. But these times, they're there to confuse you. These are those choppy times that you're not going to make much money. And that's what I was saying about trading the most liquid times in your market. That's the time to make the money. Now this Euro USD, this is classic. A lot of times after a good run, you get these choppy periods that you hate, where you just have no idea where the trend is going. But let me say this, when you shrink that price action, what you discover is most of the time price is going to follow that overall trend. So it's coming from a period where you get these kind of resting places where you get the dips. When you get the confirmation, these places are buyable, and after that good run you get this chop. And the thing that's so frustrating about this is that it usually lasts for some hours. The last thing I want to mention about a trending market is a lot of times you will get price dipping below the close and below the high and below the close before it continues to follow that trend. That's why you never want to hold on to a counter trend trade in a trend. Just tell yourself it's never coming back. It's not going to come back. So don't even start telling yourself, oh, it'll come back, it'll come back. If you're telling yourself that it's going to come back, you are on the wrong side of the trade, and you need to cut that and save that money. But always use a stop loss, and that way you don't have to worry about the pain of cutting that trade. Also, the way you enter this, after you get the bullish confirmation, make sure you enter a stop loss. The stop, your soft stop, is going to go beneath your entry candle. Your hard stop goes below the previous candle. If those candles are engulfed, get out. You do not have the advantage that you thought you did. And I want to throw this last thing in. A choppy market is a setup market. You can see this right here in this Euro JPY. You see, for days it was just kind of choppy, and you're thinking, oh, well, maybe we can get a reversal. Well, yeah, you got a little dip that was viable before price continued on a strong bullish trend, moving almost 600 pips. Maybe it was 600 pips. Almost 600 pips in that 3-day period. So trade with your trends. And I want to remind you that you can absolutely do this. You can be successful at Forex. Have a prosperous 2013.